conceptually, if I'm running a business, how do I know whether something falls in block credit or not?
How can you charge 18% on a regular filter coffee, which was earlier at a much lower rate of 5%?
Can you explain to me in simple terms when I can claim input tax credit and when I cannot claim input tax credit from a business perspective?
So let's break it down, into very simple examples, and then we will find the answers.
Why are food and beverage businesses charging customers at 5%?
Whether it is yellow board or white board, you will still get the credit.
If I'm a business that has a 2.9, which is Karnataka registration, I cannot claim input tax credit from, let's say, Maharashtra, right?
But there's one more condition, which is if you have not made the payment to your vendor within 180 days.
Yeah, wow, this is like super complicated. What do you do for a living?
You are putting me in tight spot. So please ensure that all your clients whom you're working with gives me a discount of 13%. Else I am going to...
Hanish, thank you for joining us. This is the first podcast that Script is doing, and you're the opener. Thank you so much. It's great to have you. You've had 15 years of experience post-qualification of Chartered Accountancy. I think you live, run, breathe, eat, sleep, everything GST.
Yes.
And that's why they couldn't have been a better guest than you to talk about GST. And you run a firm called C&K HSKA. You guys are amazing at everything you do, and like, of course, indirect taxation is a big practice for you guys. Thank you so much. And if there's anything you want to introduce yourself apart from whatever I mentioned, I think please.
No, I would have done a very bad job. You've done a great job. Thank you so much for that. Thank you very much for having me and considering me to be your first guest for your podcast, and all the very best for your podcast, including me as well. Because for me also, this is the first podcast I'm recording.
So we'll get straight to the meat of things. I want to focus this conversation around F&B and hospitality specifically, because I think it is very important for business owners or individuals, entrepreneurs who are setting up their business to understand the nuances of GST that probably I don't understand, right?
Right.
You're the expert. You deal with this on a daily basis. So from that aspect, can you explain to me, like I'm a 10-year-old, what GST input and what GST output means?
Right. So it's pretty simple, okay? Anything you buy for your business and you pay GST on that, that is called the input side of the GST or buy side of GST. Anything you sell to your customers is called output or the sell side of GST. Let's take a very simple example, okay, of something which all of us can relate to. So Big Billion Day is going on. You want to buy a phone, okay, and the phone is available on any e-com platform at say ₹1,00,000, with a promise that once the phone is delivered to you, you will get 20,000 rupees back in your account, which is of that particular e-commerce platform only. And that can be used by you to make any future purchases. So you bought this phone of ₹1,00,000 and you got 20,000 as cashback once the phone was delivered to you. When you bought that phone and you got the 20,000 as cashback, that is the input, what you have received from the government. Now, assuming you want to buy a camera, which is worth 1.5 lakh rupees. So when you're going to buy that camera of 1.5 lakh rupees, you're not required to pay 20,000 again. You're required to pay only the differential 1.3 lakh. That is as good as you're paying tax on your output, right? So when you adjust that 20,000 against your future purchase, you are actually setting off the input against the output. So that's all the funda of, what is input and what is output.
I think you spoke about two purchases, right? So isn't it on purchase and sale that I would make normally?
Yeah, in this example, these were two purchases,
right.
But
you can set off, sorry to cut you, but you can set off input against input you have to do later on. So is that how it works?
No, you cannot. In this example, we are talking about two purchases. There is no input set off against input. Only when you have a liability, you are setting off a input. That is a tax which you have already paid to the government. You are saying that, look, I have already paid the tax. So to that extent, I am not required to pay again. Whatever additional margin I am making, I am going to pay tax on that in cash.
Understood. Got it. And now what is the difference between inputs, input services and input on capital goods? Like what are these things generally?
Again, it's a more of a accounting terminology. Anything which goes into your inventory is input, like raw materials, right? If you're talking about F&B, say ice cream, okay, manufacturing ice cream. So the milk, the cream, all of these actually go into your final product. So that is input,
right?
Okay. But if you're availing services of somebody to ensure that you're able to serve the ice cream to your customer.
Right.
Example, you're paying rent to your landlord.
Yeah.
Okay, that is called the input service.
Yeah.
Okay, if you're capitalizing something in your books
Yeah.
and you're using that again and again to serve the ice cream,
Yeah.
like say if you are into say serving softies, so you have a machine
Yeah.
which will get you the softie ice cream. Okay, so that machine is a capital goods. So
Right.
anything which is in as part of your inventory is input. Anything which is a service is called input services. Anything which is capital, like your refrigerator
Right.
to store your ice creams, is capital goods.
Got it. So in the same example which you spoke of, which is ice creams, let's say if I make a sale of an ice cream, it's called output tax that I have to pay to the government.
Right.
And any purchase of product which has GST in it, I can set off the input against the
Perfect.
output. I understood that. Now, can I set off all inputs in this case against output, or is certain input not set off in this case? Like, for example, if I pay rent to the landlord, can I set it off? If I pay input on some cream, can I set it off? Or if I pay input on some machine, like you said, can I set it off against the output tax that is payable to the government?
So let's stick to the example of ice cream, because the hospitality industry from 22nd September, there have been a lot of changes as far as accommodation is concerned.
Yeah.
So we'll not look at those. Maybe we'll look at it at a later
Sure.
point in time.
Sure.
But just sticking to ice creams today enjoy the benefit of input tax credit. So
Okay.
that means whatever you buy for the purpose of ensuring that you are going to serve those ice creams to your customer, you are entitled to claim the credit. But you have to be mindful of one specific concept called blocked credit.
Okay.
Okay, that's, if you want to read further about that, that is section 17(5) of the CGST Act. Now, what this block credit talks about is, irrespective of whether it is used by you for the purpose of your business or not for the purpose of business, government is not going to give you input tax credit on that. Now, what are those? Specifically for hospitality, again, if you are constructing a factory or if you are constructing your own store, which involves certain amount of civil work,
Okay.
credit on the cement purchased by you, credit on the steel purchased by you, you will not be able to claim input credit on
Okay.
that. So you'll have to be mindful of all those lists, all those inputs, or transactions covered under 17(5). On that, you will not claim. You will not be able to claim the credit. You can think of maybe a director requires a car.
Yeah.
Might be for your business, you want to give car to the director, but as far as GST law is concerned, it says whether you require car or not, I am not going to give you input tax credit of that.
Oh, okay.
Right? But if there is a delivery truck for delivering goods or picking up goods, you will get input tax credit on that. So the motor vehicle itself has separate classifications on when you can claim credit, when you cannot claim credit.
Oh, okay. Interesting. So is this like for yellow board vehicles you're allowed and white you're not allowed? That it's not got to do anything with that.
That is not specifically stated.
Okay.
But what the distinction here is, if you are into the business of motor vehicle,
Yeah.
right, that is you buy and sell like
Right.
a auto dealer,
Yeah.
whether it is yellow board or white board, you
Doesn't
will
matter.
still get the credit, because for you it is an inventory.
Got it.
Okay.
Got it.
If you are running your car for giving it on rent, say you're running it on Ola, you're running it on Uber, or you have your own transport company, say Vinayaka Tours and Travels. Okay, there you have an option to go under 5% without ITC or 18% with ITC. The moment you choose 18% with ITC, you can claim credit on the car. But if you go under 5%, you cannot claim.
Understood.
But if it is, say, a software company,
Right.
and you are buying a car up to a 12-seater capacity, you cannot claim the credit at all, even though it is being used for pick and drop of employees.
Oh.
But if it is beyond 12-seater, you can claim the credit. So that is something.
This is amazing. This is amazing. So coming back to block credit, right? Like you mentioned. So I know one must go into speaking to an expert finally to understand whether what they're doing is right in terms of input and output credit. But conceptually, if I'm running a business, how do I know whether something falls in block credit or not? Like conceptually, if I have to understand this, how will I know it?
There is no logic there.
Yeah.
And there is no set pattern there that this will be blocked, this will not be. You have to only refer to 17(5)(a), B, C, D. It goes on till H, right? So if you are falling under any of that list, no credit is available. If you
Understood.
are not falling under that list, you are entitled to claim the input tax credit.
Understood. Okay. So coming to F&B, why are food and beverage businesses charging customers at 5%, and why not 18% otherwise? And they've been doing this before this to September 22nd change has
Correct.
happened as well.
Correct.
So why are F&B chains, restaurants charging at 5% to their customers?
Right. So, we've been working with a lot of clients in this industry. And, the first invoice which I got on my phone on 1st July 2017 at 12:01, okay, which is like the switch of date, was of one of our clients itself, who said that, look, we served coffee to our customer, and the first GST invoice which we raised was this. And the rate of tax on that was 18% for a coffee.
Right.
And there was a lot of hue and cry over, how can you charge 18% on a regular filter coffee, which was earlier at a much lower rate of 5%. And that's when I think, if my memory serves me right, in November 2017, which was like 4 or 5 months after GST was implemented, and after a lot of representations were made that 18% is really very high for small restaurants, it is not an option. Mandatorily, all these restaurants were asked to move to 5% without input tax credit.
Okay.
While I believe that the recommendation was reduce the rate from 18% to 12% or 5%, but the final decision which was implemented is, okay, we agree that the rate should not be 18 because the cost to the end customer is going to be really very high with it is 18%. But we are okay to reduce the rate of tax, but with a condition that you will not get input credit.
Right.
The logic also there was that if you are a small restaurant, you are sourcing vegetables, fruits, or milk or water, which is your major ingredient,
Right.
on which anyways there is no GST. So whatever small input you are accumulating, you please forgo that, and I will give you a benefit on the output tax.
Right.
That's where the scheme changed entirely for restaurants, and
Correct.
all the restaurants were bought under 5% without ITC, which continues even till date. There have been a small change here and there as far as, what do you mean by a specified premise and all. Let's not get into too much of detail on that. But so to make it really very simple, if you are a restaurant which is forming part of a hotel where accommodation services are being provided, and the accommodation services have rent tariff of more than 7,500 rupees,
Right.
then you are required to pay tax at the rate of 18%, and you are entitled to benefit of input tax credit. But if you are a standalone restaurant or a restaurant forming part of a hotel where the accommodation is less than 7,500, then you are required to pay tax at the rate of 5%, and you do not enjoy the benefit of input tax credit.
Okay. So just another follow-up question on that is, you have a lot of clients in the food and beverage industry, right? Do they think that 5% without the benefit of input tax credit is better for them, or probably 12% or 18%? If assuming, I'm guessing the NRI also has been petitioning the government to allow input tax
Correct.
credit to them, right? So let's even if we take 18%, because a lot of them will be paying consultants, they'll be paying marketing, they'll be paying franchisee fee and stuff like that, which attracts input tax credit for them. Do they feel like 12% would, with the option of taking input tax credit, is better, versus 5% without input tax credit is better for them? Which one do you feel like they're going towards?
Yeah, so we did a small math around this after this 5% was implemented to understand whether 5% without ITC is better or 12% with ITC is better.
Yeah.
But now that 12% is not an option at all, that as a rate itself has gone.
Correct.
Unless government in the future
Correct.
tries to bring it back. But when we did that math, and we did it for 2 restaurants specifically,
Yeah.
one which was a typical standalone restaurant where, the inputs are generally vegetables, fruits, on which you don't pay the GST at all because those are all exempt from tax. Their 5% without ITC was making a lot of sense.
Right.
Okay, rather than paying 18% on the output and the benefit of input tax credit.
Yeah.
Okay, but let's take an example of a restaurant which is in UB City.
Right.
And it's part of a big franchise group who is in Bombay, say assuming. Okay, so you're paying a lot of franchisee fee.
Yeah.
You're paying huge amount of money towards rent. you are adding a lot of preservatives to ensure that the taste of the food remains the same. You're
Yeah.
investing a lot on infrastructure to ensure that the quality of the vegetables, the fruits is retained, whether I have it yesterday or I have it today or I have it tomorrow.
Yeah.
There you end up paying a lot of tax at the rate of 18%. There, if an option can be given, okay, of 18% with input tax credit, I think the prices might come down. Whether it comes down or not, as a restaurant owner, you will be able to claim input credit, which is much better than today foregoing that cost
Correct.
on of the GST paid on procurements.
Got it. Just as a clarification, there is no 12% rule right now.
Right.
So there is no option of doing.
Right.
And also earlier, was there like a provision where you could either take 5% without input tax credit or 18% with input tax credit? Was that available for the F&B restaurants industry without rooms? Like for a business that was running an F&B chain without rooms, was the output tax credit at 5% without claiming input tax credit available versus output at 18% with claiming input tax credit available?
There is no option.
Yeah.
Either you fit into this or that.
Okay.
And so when we are talking about specifically restaurants which are standalone restaurants without accommodation, you were forced to go under 5%. So whether you are a fine dine restaurant in UB City, 5% without ITC,
Okay.
you are we call it as a Darshini in Bangalore,
Yeah.
you have to be under 5% without ITC.
So tell me one thing, right? A food and beverage restaurant, let's say normal Darshini or whichever restaurant, right, we're talking about, can not claim input tax credit and charges 5% to their customers. Now, if I'm an ice cream chain, I'm charging 5% to my customers, but I'm claiming input tax credit. I'm guessing ice cream is food as well. It's a little more sugar than normal. That's it. So why is this distinction between ice cream and a regular restaurant?
So let's go to a little background of this ice cream, okay? So when GST got introduced, like you, even I believed and the entire industry believed that whether you are serving idli or you are serving ice cream, you are a restaurant.
Correct.
Because you are serving food. And so everybody was paying tax at the rate of 18% because on day one it was 18% with ITC.
Right.
Came November 2017,
right,
where all the restaurants were forced to go under 5% without ITC.
Understood.
So all the restaurants, including ice cream parlors, started paying tax at the rate of 5% without ITC.
Okay.
Suddenly, out of nowhere, there was a circular which was issued by the government,
Okay.
which said that, look, and not in as many words, I'm trying to, simplify it. For me, ice cream parlor is like a trader. Okay, he's buying the ice cream in bulk, scooping it out and giving it to the customer.
Okay.
Right? So you are not preparing anything.
Okay.
Restaurant means you have to prepare food.
Okay.
In ice cream, you are not preparing the ice cream.
Okay.
You are scooping it out and giving it. So you are not a restaurant. So the product which you are supplying is actually goods. Even if it means you are adding some nuts to it, you are adding some jelly to it, which is just a garnishing on the ice cream, you are still in the business of goods. And if you are in the business of goods, the HSN of the goods will decide the rate of tax and not the blanket 5% without ITC. Nobody questioned this. None of the ice cream parlors questioned it. Overnight, everybody shifted to 18%. Then again, a circular was issued that, look, in the past, ice cream parlors were all paying tax at the rate of 5%. Now they have shifted to 18%. So everybody will get notice. So there is something called as is, where is basis circular was issued saying whatever you have done in the past, forget it. Right? From now on, you have to pay tax at the rate of 18% and you will be eligible to claim input tax credit.
Okay.
Right? Now, 22nd of September, notifications were issued where the rate of tax on ice creams as goods reduced to 5%.
Right.
So you are still paying tax at the rate of 5%, but not as a service, but as goods.
Okay.
Only services has a condition 5% without ITC, but you are paying taxes goods. Goods does not have a ITC restriction. So now ice creams are 5% as goods, but with the benefit of input tax credit. So please ensure that all your clients whom you are working with gives me a discount of 13%. Else I am going to, I'm not going to file a formal complaint, but yeah, I'm going to bring this up to you saying that I'm still not able to afford those ice creams where you are a consultant.
I can at least ask them to give us all free ice creams.
Then no ITC. Because those products have been used for making a supply on which there has been no GST. Right?
Oh,
So either you
very
choose to give
interesting.
me a discount of 13% or reverse the input tax.
Wow, that is very interesting. So tell me one thing, like how do these circulars work? So can the government give a circular and everything before it supersedes everything that was done before, even in law, or how does it work?
So the hierarchy is that first you have a constitution,
Yeah.
and whatever constitution says, that is what has to be followed.
Okay.
Then comes the act, which is
Yeah.
like the CGST Act, the SGST
Yeah.
Act, okay, which levies the tax.
Okay.
But how do you collect the tax? It outsources all that work to rules.
Ah.
But every time a section has to be amended, you have to go to the parliament. So
Ah.
there is a provision where you can issue notification. So all the rate changes can be done through
Oh,
notification
okay.
instead of waiting for the parliament
Parliament
to be in
session.
session.
Ah, okay.
Circulars are, the role of the circular is only to provide clarification, that look, I am providing clarification
Oh.
on a particular issue. That is binding on the tax officers, because it is as good as your boss is telling you this is the clarification I am giving you.
Hmm.
But it's not binding on the outsiders, which is the taxpayers. But
Hmm.
what we do as taxpayers, if it is beneficial to me, why will I not follow it?
Correct.
But if it is against me, then there is always a possibility to not follow those circulars. Then a notice will be issued to me. I will challenge that. And then, based on the section and the rules, the court will then decide whether the circular was in line with what was there in the section or the rules, or was it not in line. If it
Amazing.
is beyond the statutory provisions, then the circular will be struck down. But if it is in line with the requirements of the law, then the court will also ask us to follow that circular.
Understood. So now coming back to this, right? So you said that because now ice cream is termed as goods, you can now claim input tax credit and 5% you can charge to your customers. Now, but what if someone's manufacturing the ice cream or producing the ice cream in at site at location, scooping it out and giving it? Wasn't that going to be termed as service tomorrow? I don't know. Is there going to be
Yes,
an issue?
that issue is definitely there. If you are buying the ice cream and selling the ice cream, then that 5% will come, because it will be treated as goods.
Yeah.
And they have distinguished on the ground that you don't prepare the ice cream. But if somebody is in-house preparing the ice cream and then serving it, then I don't see any difference between a rava idli being prepared by him versus a ice cream which is being prepared by him. It will still be treated as a service, and it should go under 5% without ITC.
So you're telling me that, let's say if I'm Amul and at my manufacturing site, if I have an outlet and someone comes and enjoys an ice cream, I am going to treat it as a service and there's no input. Whereas if 2 kilometers away I have another outlet and I distribute that ice cream there, then you can claim input. Is that what you're saying?
It is not as simple as that, maybe, because the reason is, specifically if we talk about Amul, he has already packaged the ice cream and then he is giving it. It's a
Right.
bulk packing.
Right.
It will still be treated as goods. I am
Okay.
talking about, say, restaurants who want to give like a fresh experience to their clients. So they say, I will make the, like, easiest example is kulfi, which can be made in like 2-3 hours.
Yeah.
Right? So if you're making the kulfi in house and then serving it to your customer, and you don't have any other location where you're shipping it,
Yeah.
okay, or gelatos, if I'm not sure, but or a yogurt based ice cream, which
Okay.
you're preparing it fresh and then making it available to your
Right.
customers based on the order, or you make it based on the estimate of how many orders you will get and then serve it fresh, or make something, add some ingredients to it and then serve it, that will be treated as a service.
Okay.
But if you package it in bulk, it will always be treated as goods.
Understood. So even if you package it at bulk and give it out to your own restaurant and then serve it to your customers, it still be treated as goods, is what you're saying. Wow, that's very interesting. Okay, so now as a business, let's say I am running a business that has a ice cream division and I have a restaurant division also, right? On one division I can claim input tax credit, on the other I can't claim input
Right.
tax credit.
Right.
Then what happens? How do I ensure that my accounting is right, I'm following the norms as per GST in basis of input tax credit, I'm saying?
Right. So here we'll have to, accounting plays a very important role here, of how do you account those invoices, how do you raise the purchase order, how do you decide which division this consumption is happening, because the laws are clear, but the implementation of law is where the challenge arises. If something is exclusively used or consumed in the restaurant, you cannot claim input tax of the same.
Okay.
If something is going to be consumed exclusively in your ice cream parlor division, you can claim full input tax credit of this. But cutlery is going to be common.
Yeah.
Okay, the tables are going to be common. So there, if something is used both for your restaurant division and for your ice cream division, then we call this as common credit, because it is commonly used for both taxable purposes and exempt purposes. That's where there's a formula which has been given in rule 42 of the CGST rules. That formula comes into picture, and they say identify those common credits, multiply it with the exempt turnover, that is your restaurant, divide by your total turnover. That is the amount of input credit which you cannot claim. Right? Everything else you will be able to claim. So assuming your restaurant is 60% of your total turnover, whatever is your common credit, 60% of that you will not be able to claim, 40% you will be able to claim.
Understood.
It is not as simple as it looks like, because say suppose you are talking about capital goods. We talked about what is input services, capital goods. Now the table on which the customer is going to sit and have his paneer tikka, and he's also going to have his ice cream, that is a common credit, but it is a capital goods.
Okay.
Right? There is an inherent assumption in GST that capital goods are going to be used for 60 months. Okay, 5 years. So 5 years multiplied by 12 is 60 months.
Okay.
So the total credit on the capital goods divided by 60 months becomes the credit for every month.
Right.
Okay. The credit of every month multiplied by the exempt turnover divided by total turnover. You have to keep doing it for the next 60 months.
Oh, okay.
Right. And then decide how much credit is available, how much credit is not available.
Wow.
So it can become
it gets very complicated. But my understanding was that, like, if it's capital goods, you can claim 100% of the credit right in the beginning.
Correct.
Isn't that the case?
You claim it on the first day.
Okay.
But you keep testing for the requirement of whether it is being used for taxable or exempt for the 60 months.
Oh.
Okay. And any month you have exempt as well as taxable, and that capital goods has been used for both, only then this issue comes. Assuming you have a refrigerator in your ice cream parlor division which is used exclusively for storing ice creams, this headache is not there.
Understood.
Right? But if you have a common refrigerator where you store the fruits, the vegetables and the ingredients which are used for restaurant, and it is commonly used for ice creams as well, there you will have an issue. Versus a refrigerator which is used only for storing the ingredients relating to restaurant, you will never claim the credit.
Okay, so you have to keep backtesting, assuming there's amortized value and go to that. Wow, that's very interesting. So coming to this, and another question on this aspect itself, right? A lot of F&B chains, let's say, will have procurement which is very common, right?
Right.
They can be using milk for their restaurant and for ice cream.
Right.
Or milk now, probably there's no GST.
Right.
Let's take cream, for example. There may be GST on this.
Right.
They might be using it in their restaurant for smoothies and stuff like that. And they may be using it in their ice cream division as well.
Right.
So how do they know which one they're using what for? Like, and how do they allocate this based on what you're saying?
So again, it depends on how they are getting the invoices. They have to structure the transaction. If the quantum is really very significant for them, the GST component is very significant, and they want to be GST optimized GST. They want to optimize the GST on their purchase side. They will have to make that effort to either get separate invoices from the vendor and account those also very, very, clearly demarcate it, saying that, look, 100 kgs of cream gotten or 100 kgs of a particular ingredient got. 50 kgs is going to be used in my restaurant division. The balance 50 is going to be used in my ice cream division. Ice cream, I'm going to claim the credit. Restaurant, I'm not going to claim the credit. Okay. So instead of getting a single invoice for the entire 100 kgs, they will have to back calculate what is the quantity they are consuming, which is common, and get two separate invoices. Mark the invoice which is for restaurant as credit cannot be claimed in their accounting system. Mark the invoices which is going to their ice cream division as credit can be claimed. But if that bifurcation is not available, mark that invoice as common credit, and based on the formula, claim that credit. Okay,
so with respect to the September 22 new tax regime, right? Can we call it a new tax regime? Is that
definitely? There have been a lot of rate changes post September 22nd. So it is definitely a new tax regime.
Okay, so how does the F&B industry benefit now from this new tax regime? Is there any benefit that has been given out to hospitality, let's say, in totality? I know there's a lot of benefits with respect to some products let's say milk, like you told me, like there's no GST on it. Is there anything specific that has been given out to the food and beverage industry?
You had to pay tax at the rate of 5%
Correct.
without input tax credit. That
Correct.
means whatever you were paying as input tax credit
Yeah.
was a cost to you.
Correct.
Because you could not set off.
Correct.
Like going back to our example of a e-commerce platform.
Yeah.
Imagine you buy a phone of 1 lakh rupees, you get a cashback of 20,000, and then overnight they say, no, you cannot use this cashback.
Yeah. Yeah.
Right. So that means that 20,000 is a cost. That means your phone now which was you thought was 80,000 is actually 1 lakh rupees. Right. So likewise, anything you purchased and on which you have paid GST was a cost to you.
Correct.
Right. In the new regime, what they have done is a lot of commodities, which is actually food related, they have reduced the rate of tax from 12% to 5%. A lot of sauces which are used for preparation of food, the 12% has become 5%.
Okay.
So while you may not get a direct benefit, but indirectly, if earlier these commodities you were paying 100 plus 12% GST, you will now pay 100 plus 5% GST. So there is a straight saving of 7% of GST on your cost. So while the output remains the same, you are getting a 7% GST benefit because what was earlier your cost has reduced. Right. So that is one benefit which has been given.
Okay.
The second, I am not sure if it is a benefit, okay, because it could be a big liability also, is up to 7,500, the rate of tax on accommodation, okay, was 12%, and beyond 7,500 was 18%. With the 12% slab going, what they have done is up to 7,500, the rate of tax has been reduced to 5% without the benefit of input tax credit. And any room sold beyond 7,500, it still continues at 18% with input tax credit. Right. So if there are any hotels which are operating below 7,500, which did not have a lot of input tax credit, there you will benefit because these were, if they were catering to B2C customers like you and me, okay, who are using these hotels for budget travel, the rate of tax will now from 12% reduce to 5%.
Yeah.
So there is a 7% benefit to us. What these hotels will do is they will assess their input tax, because earlier they were claiming input tax. Okay, now they will not get the benefit of input tax credit. So that input tax becomes their cost, which say assuming is 3 or 4%. So they will increase their base rate by 4%, but on your output tax, reduce it by 7%. So you still enjoy a 3 to 4% delta after September 22nd.
Okay.
So that is the benefit which the end customer gets after 22nd September.
So another thing that I was like curious about in this case, right? Say for example, because GST is payable upon making an advance also.
Right.
What if someone made an advance before September 22nd and now is traveling after September 22nd?
Right.
What happens in that case? Because they would have paid output at they would have paid at 12%.
Correct.
Now the prices have changed to 5%. Correct. So what happens then?
We have a GST has solutions to quite a lot of complex situations, but it does not have for quite a few as well. So that is the for later part. But for this problem, they have a solution.
Okay.
It identifies 3 situations, okay, and says that if any of these 2 situations have happened after the change in rate of tax, then the new rate will apply.
Okay.
But if any of these 2 situations have happened before the change in rate of tax, then the old rate will apply. Now, what are these 3 situations? 1, as a hotel, have you received the money before the change in rate of tax or after the change in rate of tax? Have you raised the invoice before the change in rate of tax or after the change in rate of tax? Have you provided the service before the change in rate of tax or after the change in rate of tax? Now let's look at your example. You're traveling in November for which you have booked a hotel and the room rent is less than 7,500 rupees. You opted to pay 100% advance, including taxes.
Yes.
Okay. So the taxes were calculated at the rate of 12%, right? As a hotel, they have only received advance. The other 2 situations or criteria which are raising the invoice is only raised when you check out.
Yes.
Right. Correct. And second is the service is provided only when you go to the hotel.
Yes.
Right. So 2 out of 3 events are happening after the change in rate of tax.
Yeah.
So that means even though the advance was paid before, the rate of tax applicable for this service is only 5%, which effectively means you are entitled to a 7% discount.
Oh, so can I claim this from my travel if I booked a hotel?
Okay, so you are putting me in tight spot because I have been advising my clients as well that yes, you have to give the discount of 7%. But the
Yeah.
problem is that when you entered into this contract,
Yeah.
you were entitled to input tax credit.
Yes.
But now you're not entitled to input tax credit.
Yes.
So your base price increases, your
Oh,
output tax reduces, but the base price.
correct.
How do you communicate this to the client and say,
Yes.
look, while our prime minister has announced a 7% discount, but I will give you only a 3% discount because my base price is increasing. So every business will have to now decide whether they want to pass on the entire 7% or educate the customer that 7% is the output benefit, but I am losing a 4% input benefit, so I am giving you a 3% discount.
Ah.
Or tell them, look, I know, but I don't know how to pass on this discount, so one meal is free from my end, so lunch is free or a breakfast is free or something like that.
So if I'm traveling, at least I'll get a meal free.
Some benefit I think the hotel will have
Okay.
to based on their how they want to project their image
Yeah.
to the customers.
Got it.
Because I was having this discussion when both the tax team and the marketing team was there.
Okay.
So the tax team said, yes, 7% minus 4%, 3% only is what I can give.
Yeah.
The marketing team said, I cannot handle the emails of the customers.
Yeah.
So please reduce it by 7%. This is a 3%, 5%, 3% cost, which you will have to bear.
Incur the cost.
So now, the CEO will have to now decide which team will prevail, whether a marketing team will prevail
Okay.
or the tax team will prevail.
It's an interesting predicament that they're in for a short period though. Okay. So tell me one thing. Why why can you claim input tax credit only for travel within where the GST registration or the jurisdiction of the GST registration is located? Like, for example, if I'm a business that has a 2.9, which is Karnataka registration, I cannot claim input tax credit from, let's say, Mumbai, Maharashtra, right?
Okay.
I don't know which what number that is, but I cannot claim that. Why is that case?
Okay, let's go back to our e-commerce example. Okay.
Yeah.
And let's take example names as well. Okay.
Yeah.
Right. So there's Flipkart. You bought your phone on Flipkart.
Correct.
1 lakh rupees.
Yeah.
You got a cashback of 20,000 rupees.
Yeah.
Right. Now, can you use that 20,000 rupees available with you to make a purchase on Amazon?
Yeah, you can't.
You cannot.
Yeah.
Why? Because these are two separate e-commerce platforms.
Correct.
Right. Now look at GST. While there is one nation, one tax, whatnot. Okay. Which sounds very good. But effectively, we are looking at GST state specific.
Yeah.
Right?
Yeah.
You are in Karnataka.
Yeah.
You went to Maharashtra.
Yeah.
The tax which is payable for your accommodation is sitting in Maharashtra. 9% which is sitting in CGST is with the central government. The 9% is with the Maharashtra government.
Okay.
You are coming back to Karnataka with the GST registration of Karnataka and then asking the Karnataka government, look, I have paid something in Maharashtra, give me an input of that. That's like asking Flipkart to set off your 20,000 against the purchase in Amazon. Will not work, right? So likewise here as well, the tax sitting in Maharashtra, you will not get an input of that in Karnataka because that is for that government to enjoy.
Okay. But how does it work? Let's say if I'm hiring a consultant from Maharashtra,
Excellent.
I'm able to claim, right? How does it work over there?
So there's something called as place of supply rules, okay?
Right.
Where they have defined what do you mean by place of supply and which state are you consuming that service.
Okay.
So if that service relates to an immobile property, which exactly is in case of accommodation, then the place of supply is the place where the property is situated. You are consuming in Maharashtra. Though you might be a resident of Karnataka, you are consuming that in Maharashtra. That tax cannot travel outside the state. Right? Okay. So when you get the invoice also from the hotel, it will say your address is Karnataka, but place of supply is Maharashtra. And they will charge you a CGST and Maharashtra GST. But when you talk about the consultant, the place of supply to a registered person is the place where you are located. You are located in Karnataka. So he will say, the place of supply is Karnataka and give your GST number so you will be able to claim the input tax credit of the same.
Okay, I did not know this place of supply. I was always wondering why is this distinction. So how, if I have to just zoom out for the macro level, right? Maharashtra loses out versus Karnataka in this case. How does the government sort of compensate in every place when this happens? Because I'm guessing there is transfer of services between states.
No, so GST is again, while CST, which was before the GST, was a destination based tax,
Yeah.
where the taxes would come to the state where the goods have originated. So if Karnataka manufactures and sells it to Maharashtra, Karnataka will get the tax.
Okay.
GST has fundamentally shifted that to destination based consumption tax.
Okay.
So wherever the consumption is happening, that state will get the revenue. In this case, the consultant service has been consumed in Karnataka
Right.
while it got generated in Maharashtra. The tax has to be passed on to Karnataka.
Wow, this is very interesting. I didn't
Right.
know this. Thank you. So now let's say coming back to the restaurant example, right? We run our own companies, and
Right.
wherever, let's say in the same case, right? If I one of my clients stays in one of the hotels in Bangalore where I'm paying a GST, I can set it off against my output liability on GST, right? When I'm going to
You're
dine,
talking about accommodation.
accommodation,
Right? Yeah,
right?
accommodation you
So
can set up.
this is my predicament here, right? If I'm going to have my client stay in a hotel which is, let's say, above 7,500 rupees, I can claim the input tax credit. Right?
No, why above or below?
I was coming
Okay.
earlier in this case. It was like, let's say at 0 I could not claim. There was no GST itself, right? If I'm dining in a restaurant that is standalone without rooms, I cannot claim input tax credit on it. Now, I don't know if I'm eating an ice cream, can I claim input tax credit on it or not? Like if my client eats an ice cream and I reimburse him.
Right.
So can you explain to me in simple terms when I can claim input tax credit and when I cannot claim input tax credit from a business perspective?
Right. So let's break it down, okay,
Yeah.
into very simple examples, and then we will find the answers. Restaurant services, whether you're dining in a restaurant who is going to charge you 5%,
Yeah.
or he's going to charge you 18%, including ice creams, you will never get the credit because that is under the blocked credit.
Okay.
Restaurant you cannot. Certain exceptions are there. I am looking at an example where Geet is talking about Script Capital, which is into the business of raising funds for the clients, which is into the business of advising clients on how to do business. He will never be able to claim credit on food or ice creams.
Okay.
So after this podcast, if you're taking me for an ice cream, you will not get the credit, right?
Okay.
But you still have to get me ice cream.
Of course.
Right?
Yeah.
Okay. So whether it is 5 or 18 does not make any difference.
Yeah.
Right? But when it comes to accommodation, whether it is 18 or 5,
Yeah.
right? That with credit or without credit is for the supplier. You are a recipient. For you, whether he charges you 18% or whether he charges you 5%, as long as it is for the purpose of your business. And you rightly give a very interesting example that your consultant, your client is staying, you will be able to claim the credit.
Right.
But you're going to say Hampi for the next week, which is an extended weekend, right? For a holiday. That is for personal purposes.
Correct.
So whether you go to a property which is going to charge you 18 or 5, you will not get the credit.
Right.
So as long as you're using it for the purpose of business,
Right.
18% or 5%, you can claim credit if it is for accommodation. Whether it is for business or for personal, restaurant, 18 or 5, you will never get the credit.
Now, my other question on capital goods, which we were talking about, right? We all know in accounting that capital goods is meant for a period beyond the accounting period.
Right.
And hence you capitalize it and show it as an asset in your balance sheet.
Right.
Now, shouldn't the input tax also be shown as an asset in the balance sheet and not be taken immediately? Logically, that is what makes sense to me, right? Why is the GST department or GST rule allowing you to claim immediate credit for a good or for something that is available for a 5-year period like you mentioned? And how is that logical?
You know, when a benefit is given to me, I'll be more than happy to take that, right? So the benefit which has been given to me is you purchase the capital goods, you get the credit instantly.
Correct.
Right? But there is a condition also that if you don't use these capital goods, like I said, there is an inherent assumption that all these capital goods are going to be used for 5 years. You might have an accounting policy that you will discard the laptops after 3 years.
Okay.
They are not bothered about that. The rules are not bothered about that. There is an assumption that you are going to use any capital goods for 5 years.
Okay.
Assuming you dispose of or sell these capital goods or you discard those capital goods, then the same formula for the unexpired period. So assuming 5 years is the period, you have used it for 1 year and then you're discarding it.
Yeah.
For the 4 years,
Yeah.
The credit was given to you on the promise that you will be using it for 5 years.
Yes.
You have used it only for 1 year. For the balance 4 years, you will have to give back the credit in the form of tax to the government. So let's take an example of laptop on which GST credit itself is a lakh of rupees, right? You take it on day one, use it for 1 year. The laptop you're using it for 1 year, the capital goods you can claim the credit on that 1 lakh rupees instantly. After 1 year, you discard it. The 80,000 rupees, which is for the next 4 years, you will have to pay it back to the government.
Wow.
So they're giving the benefit to you on the first day with the condition that you will use it for 5 years. If you fail to use it, you have to give back the money to them.
So there's one question I had. Rooms below 7,500 rupees has GST of 5%.
Right.
Rooms above 7,500 has GST of 18%.
Right.
Now, if you've gone to Goa, you know that you will not get anything below 7,500 in December.
Right.
Right. So everything is above 7,500. You won't get a room for below 7,500 unless you're going into one particularly place that you don't want to stay at. Now, in that case, how does it work? Do they take input credit or not? And how do they decide what to do?
Right. That's going to be a very interesting problem to solve actually post September 22nd. So let's look at few examples. You have 5-star properties in Goa, which will always sell beyond 7,500, whatever might be the season.
Yeah.
They are in a very sweet spot, 18% output, claim input tax credit on that, no worries at all. There are few hotels, maybe I'm assuming, who during Christmas also and New Year holidays or any other part of the year as well are always below 7,500. They are also pretty happy. It's always 5% without input tax credit. Okay. So they don't claim any input tax credit at all. But these business hotels or hotels which are in between, where during a part of the year they are at say 6,000 or 7,000 rupees, and during peak season they charge 8, 9, 10 or whatever beyond 7,500 rupees. So they will have to solve their problem on how do they claim input tax credit, because for the period where they were below 7,500, they will have to charge 5%, not entitled to input tax credit. If they are beyond 7,500, they will have to charge 18% to their customer and claim input tax credit also. So let's look at few examples of what this problem really is. Maybe during our conversation earlier also, I was talking to you about this. Say, assuming you have a hotel which has two categories of rooms. One is suite rooms, which are always at more than 7,500 rupees, where you give a particular kind of soap, a little luxury feeling to your customers. You will be entitled to input tax credit of that soap because that's always being used in a room where you're charging 18% with GST. But if you have certain, a smaller or a cheaper variant of that same soap or a different variant, which is going into rooms which are at 7,000 rupees off season and more than 7,500 during the season, there the soap will be treated as a common credit, which we were talking about. Okay. So the total invoice, that is total soaps purchased by you during the year, multiplied by the exempt turnover, divided by the total turnover, that is how you will have to decide what is the credit available to you or the credit which is not available to you. So everything goes into common, and only at the end of the year, based on the percentage, you will be able to decide whether the input credit is available or not. Now, just add another layer of complication to this, okay? So you are a hotel which has both these categories of rooms. So that means your restaurant is 18%, correct? With ITC. But you're offering this 6,000 rupee room at 5% without ITC, okay? And giving breakfast free. So that means your food is also being consumed for an output which is 5% without input tax credit. Correct. That means whatever you buy in your restaurant also is common credit, and you will have to reverse the input tax credit. I don't know whether I have simplified the problem or complicated the solution. I have no idea on that. But if you are in that space where you have rooms at both more than 7,500 and less than 7,500, then your input tax credit is common for everything. Your restaurant is also a common input tax credit, though you are charging your customers at 18%, because still there is a small component of breakfast which is being given by you free of cost to those rooms where a lower rate of tax is being suffered with a condition of no ITC.
Wow. So, okay, I'm an accountant of this let's say hotel.
God save
Okay.
you.
First of all, I have multiple questions. How will I know which soap is being used in which room? Right? I will not know this. This is a decision taken by the operations team or whatever, right? That is one. Second, I'm sitting in September. Okay. And how will I know whether my team is going to increase the price in December or not? They may or may not, based on what is happening in December. So based on the logic that I'm not going to increase the price, I have taken input on everything or not taken input on anything.
Not taken input.
Yeah,
on
not
it.
taken input on anything. And suddenly when I arrive in December, I'll then be realizing that I'm eligible for input, or vice versa. Today I'm at 10,000 rupees, something happens, market goes bad or something like that. I drop the price in another month. How am I to anticipate that the price change is going to happen when I don't know it? And in the event that I am now in the other way, where I have taken input tax credit where the price is higher than 7,500, and now I'm going to lower my price to below at 5% without input tax credit, what happens? Because I've taken wrongfully input tax credit according to the government.
Right. So both these questions we'll answer one by one. Point number one, how will I as an accountant know which soap is being used in which category? That's where I said, if you are able to bring that distinction in your procurement team itself, that if these are rooms beyond 7,500, we will give a different category of soap. So now on the purchase of that category of soap, you will know that you are entitled to input tax credit. So you will have to bring in a lot of change in your procurement cycle also, how you procure, from which vendor you procure, how do you get the invoicing, right?
Okay.
So there you will become GST efficient.
Okay.
If everything is common, then that formula plays the role. So that's what you will have to strategize. The purchase team, the marketing team, the tax team, the finance team, operations team, everybody will have to sit down and come to a solution. The easiest solution I would think is give something a little premium or something which is distinguishing to at least ensure that all your above 7,500 rooms, the product is categorized separately, your purchase side is categorized separately, so you get full input tax credit on that.
Okay.
Right? Now coming to below 7,500, above 7,500, you cannot do anything at all. Everything sits into the common basket of common credit. You keep claiming the credit and you keep reversing the credit based on the formula. So whenever your output is taxable, that month your input will increase. Whenever your your rooms are exempt, your input will reduce. But at the end of the year, the total credit multiplied by the total exemption for the entire year, divided by the total output of the entire year, you will have to do a true up, and you will either pay if your reversals which you did on a monthly basis was less, or you will reclaim if your reversals which you did on a monthly basis was higher.
So when do you do this true up generally?
So you do the monthly reversals.
Okay.
And the true up is open to you to be done between April to September. Right? So within that time you do. It is in your interest to do it as early as possible, because if you have to pay to the government for every month's delay, you are paying a 18% per annum interest.
Wow, that was
So
my next question.
yeah, so you do it in June and you have overutilized or you have short reversed the credit on a monthly basis. You paid by June, so you have to pay interest only for 3 months, right? And if you have reversed additionally, right, and you have to reclaim, you have to do that by September only, because after September you cannot make a claim for the additional input credit.
Oh, okay. But do you get an interest if you have extra?
You don't get interest.
But the income tax department gives you an interest.
On the cash refund.
Correct.
So there are situations where you might get refund.
Okay.
Okay, but not in this case.
Okay, so it just gets added back to your input tax.
You have to claim it back.
You have to claim it back.
Only then it gets added. So it is an effort to be made by you.
Okay.
Based on which you will get that money back.
So tell me one thing. How long can you carry this input tax credit? Like, one is the actual credit that you've got, and then this reversal credit, let's say you've got based on this common credit assumption that you've done. Right? How many years can you carry it for to set off against your tax payable?
Once you have claimed the credit, unless you know it is a common credit where you have to do a reversal or re-avail the credit which you have already reversed, if it is a credit which is available to you, there's no time limit up to which you can carry it forward, right? Okay. You can carry it forward permanent, meaning for how many ever years, and it is available to you. Whenever you have an output tax, you can set it off against that.
Okay.
Utilization does not have a time limit once availed, but your availment has a time limit. So assuming you have an invoice of 25-26, 1st April 2025 you got a invoice, you have to claim input tax credit of that by 30th November. Okay, now 30th November is a very odd date, which means your last return of October, which is due to be filed by 20th November, you have to claim all your credit relating to invoices which are dated between 25-26. So if it is an invoice of 1st April 25, you get time till 31st October 2026. If there's an invoice of 31st March 2026, still you will get a time only till 31st March 2026, because that's a fixed date.
Got it.
So for an invoice of April, you will get as much as 18 to 19 months to claim credit.
Okay.
But for an invoice of March, you will get like 6 to 7 months.
Understood.
Because for that period, the date is fixed.
So this comes to another question I had, right? So for example, GST is payable whether on receipt of money or on invoices, like you mentioned. You had those three rules, right? One is receipt of money, one was invoicing, or one is render of services.
Right.
These 3 points. Now, assuming I have I have had this, like I've done a service. Let's say I've procured a service from a vendor, and I have not discharged the payment made to that vendor, right? But I've claimed input. How long can I keep this input with me and set it off against my tax without making the payment for it?
So again, you will claim the credit when you've received the invoice. Correct. And subject to other conditions appearing in your 2A, etc., etc. But there's one more condition, which is if you have not made the payment to your vendor within 180 days, you have to reverse the input credit. Okay. And whenever you make the payment to your vendor, you can reclaim the credit. For reclaiming, there is no time limit.
Okay.
For the first claim, that 31st October, which we were talking about, for reclaim, there is no time limit.
Understood. But what in the other case where, let's say I have made a payment, but the vendor has not discharged the payment to the government, does it get reversed to me then? Because I've made the payment. The vendor is not.
See, that's where there is a lot of issue between the taxpayers and the government, where the taxpayer is saying, look, I have made the payment to my vendor. Just because he has not filed the returns, I should not be denied the input credit because I am out of pocket. Whereas the government is saying that credit is available to you if I get the money.
Correct.
If I don't get the money, how do I give the credit to you?
Correct.
So that's where the tussle is, and I think the way GST laws are being amended every year, especially on input credit, it is better to, claim the credit only if all the conditions are satisfied, in the sense that the invoice is available, the vendor has discharged the tax. How do I verify it? Government is working on a lot of, procedures around it.
Okay.
But one of the mechanism is whether it is appearing in my GSTR 2B or not.
Okay.
And only then claim the credit.
Okay.
While we can, fight it out, and, there have been a lot of judgments also where they say, look, the government has given registration to him. So if a supplier is not paying tax, catch hold of him. You cannot expect the recipient to go behind the supplier.
Correct.
Okay. And what are the action you have taken against the supplier? Have you issued a notice to him? Have you even attempted to recover the money from him? If you haven't recovered, then come back to the recipient and claim the credit from him by way of output tax.
Okay.
But that's going to be a
challenge between the things.
Yes.
So as a taxpayer, if let's say all of these rules, there is something that is not making sense to me or something that is unfair to me, is there a way that I can go to the government and say, hey, this does not make sense, this should, because everything is very, very subjective, right? Then there's so many provisions, so many rules, there's so many, the law itself. Like, is there a way that I can talk to the government or give them a suggestion or, fight the government, whatever it is, right? And say, this should not apply, because everything is used as a case law, as a precedent, right? How do I create a new precedent saying it's unfair or this should not be done, or how do I represent myself?
There are many avenues through which you can reach the government, but whether they will decide on that or not is something completely different. But what are these avenues? One, Twitter. All the ministers are on Twitter, so you can tag them. The ministries, you can tag them, and then you can escalate the issue. Second, if you are part of any association, okay, if it could be FKCCI, if the restaurants have some association, if ice cream parlors have a separate association, So represent through the association, because then collectively when you go together, it's a common industry problem. There is always a chance that the ministry or the GST council is going to, look into it. The third option, of course, is write to the GST council. Fourth is to the commissioner whom you are reporting to. Say Bangalore has a commissioner, so meet him and tell him to take it up with the finance ministry whenever there is a GST council meeting. So these are the avenues, but there has to be a strong push from your end through the right channels. Only then the issue will be heard, because there are so many issues which are sent to them, and not all of them are acted upon.
I think I've run out of things to talk about because
Right.
we're focusing on the food and beverage and hospitality industry. Anything else that you want to add? Like maybe I've missed out anything that you want to talk about, any topic that you think is worth talking about?
Yeah, there are, after this 22nd September, there are a lot of questions which have been asked commonly, and I think it's important for us to address those also. So I will pick up a couple of situations and try giving answers to those. Okay, right. So if I have like multiple lines of businesses, one is restaurant, which is 5% without input tax credit. Second, I have accommodation, again, which is 5% without input tax credit benefit. And I have some other business. Okay, I can think of, say, I have a training institute. Okay, where I'm paying 18% tax.
Yeah.
In a particular month, I did not have any course which was running.
Yeah.
But I have paid rent for that premise, and
Yeah.
I have incurred certain expenditure relating to training business. Okay. Now, can I set off my input credit of training against the output tax of restaurant and accommodation, which is 5% without ITC? So here, which we have, what the thing which we have to take care of is that the condition is I should not claim input tax credit. The condition is not that I cannot discharge the tax by utilizing input credit.
Okay.
Right. So if I have a credit which is rightfully mine, that credit can be utilized to pay this tax. And it is not that I have to discharge this tax only in cash.
Oh, okay.
Right. So that is one thing we can take care of. The second issue which comes up is, and not related to, accommodation services or hospitality industry, but in general, is I sold something before 22nd September. And those goods are coming back to me after 22nd September. And earlier the goods were liable to tax at 18%, but now the goods are liable to tax at 5%. This credit note which I issue should be at the new rate or the old rate. The concept of credit note itself is that it is cancelling the original transaction.
Correct.
Right. So if original transaction is at 18%, then the cancellation of the transaction by way of credit note also has to be at the original rate only.
Correct.
So even if you are issuing a credit note after 22nd September, it has to carry the GST rate applicable to you for the original transaction, which was 18%.
But you will be setting it off against a new rate of 5%.
Of 5%.
That is okay.
That is okay.
Okay.
That's
so you might be setting off more than what you're actually paying, because today you can't go back and charge at 18% because now you're at the 5%.
Exactly.
So that is okay, you're saying.
That is okay.
But this is a case of common credit only. The first example where you gave, which is
goods is separate, right? So assuming you're talking about, say, the shirt which you're wearing.
Yeah.
Now the limit for the shirt is 2,500.
Okay.
Okay. Earlier the limit was 1,000 rupees.
Okay.
Okay. So assuming you sold a shirt which was worth 1,000 rupees and charged a tax of 12% to me.
Yeah.
Now after 22nd of September, I am giving it back to you because I did not like the shirt.
Yeah.
Okay. Now the rate of tax is up to 2,500. The rate of tax on shirt is only 5%. Right. When I'm giving it back to you, you have to give me a credit note. So when you issue the credit note to me, you will still give me the credit note at 12% only. Right. So what I would have done, I would have claimed the input tax credit when I bought the shirt. I am giving the shirt back to you. So I will reverse the input tax credit also at 12%. Right. You had originally paid 12% tax. Now you get back the 12% because of the credit note. But all your fresh sales are at 5%.
Correct.
So what you will do is you will show your output as 5%, but input adjustment, that is output adjustment, because based on your credit note at 12% only.
Okay.
And you will set off against the liability.
Okay.
So no issues on that.
Okay. Wow. This is like super complicated. What do you do for a living?
Yeah, 100%.
Everybody thinks GST is just paying off a GST and having it, but I guess it's super. How do you as an accountant, like you're a professional who's only looking at GST every day, right? As a normal accountant, how do you keep track of these changes? It's just insane, the amount of changes, the regulations, rules, circulars, clarifications, all of these things. So how do you keep in touch? Where are the resources to keep in touch, or like keep in touch with the changes that are being made?
The best source would be the CBIC website, which where all the notifications are uploaded, but it's really very difficult to read those notifications.
Yeah.
That's where you will require a professional help. Like, you know, the moment the notifications were out, and we were talking to our clients and saying that, look, the notifications are out, one of the accountant called and said, good, you have shared all the notifications with us, but I cannot see that the accommodation services has got reduced from 12% to 5%.
Yeah.
I don't see that notification at all.
Yeah.
Then I had to, very difficult but to explain. But, there was a notification earlier. We call it as, say, notification number 1.
Yeah.
Then there is notification number 2, which amends notification number 1.
Yeah.
But notification number 2 will not say accommodation services reduced to 5%.
Oh, okay.
It will only say, go to notification number 1, entry number so and so, 12% change to 5%. So you will not see in notification number 2 a line item which says restaurant services changed to 5%. It will say go to notification, go to serial number, 12% to be read as 5%.
Oh my God.
So that becomes really very difficult. You will require somebody who is day in and day out working on GST to help you navigate through the complications. One time. It's not like every day, but one time you will require that help.
So my last question to you is, in the world of AI, right? I'm guessing you guys are using AI in some way or the other, right? Is the department, consultants, are like accountants using AI to understand all of these things better, structurize it? Like, how is it being used in GST today? Is it being used? How is it being used?
No, I think as of now, AI is a solution which is waiting for problems to be defined, at least from a GST angle.
Okay.
Right. So we have not been able to find out or define a problem which the AI will be able to solve. But I can see a lot of use cases where AI can be used, like review of contracts, review of notices to, give me a preliminary, at least a summary of what are the issues which we are talking about. But because of data privacy issues, the NDAs which we would have signed with the client, we are not able to use that, or we would not want to use it.
Right.
But once, everybody's talking about AI, I'm sure there are going to be tools which will be tailor made only for GST. That point of time we will be able to use. But it can cut down a lot of time on research. So there are a lot of tools which have come up, though in a very elementary stage. We tried experimenting and, the tools were not able to give answers to it. But what they are looking at is, so they have their entire database of case laws. I will define a question and they'll give me all the case laws relating to those questions. So I read those case laws and then check whether those are relevant for me or not, and then make it part of my answer, or make it part of my submission to the department. That is where AI can play a very important role. In a compliance, maybe if there is a tool which can where we can define the common hygiene issues, and then AI looks at the entire file and says, look, these are the line items where there are issues. So that is where AI can play a very important role, cutting down on all the routine checkpoints which requires a manual intervention. But as of now, I have not seen any tool. We have been working with a lot of AI companies where they are saying, can you help us build something relating to GST? We have given our inputs as well, but I have still not yet seen any finished product. It will take a lot of time. Also because it's very expensive. So every retrieval of data is being charged. Okay. So say, assuming you want to upload 100 invoices and say, look for exceptions in these 100 invoices. So every retrieval of data is being charged, which becomes really very expensive. So one, the technology will have to, be a little more accessible by way of it being a little cheaper. And second, those many tools will also have to come. Then we will be able to adapt to AI in a very big way.
Do you think that at least for bare minimum access to consultation, AI will solve a lot of things for the common public with GST? Or do you think of course you'll need high profile GST consultants like you for specific problems and use cases, right? But I don't have to call you for basic questions again, right? If assuming there's a tool which gives me answers based on my queries, do you think ever we'll reach a point where at least elementary questions and stuff like that, AI can answer. And to take it like to matters of representation also, AI could be used at some point.
It's definitely a good starting point.
Yeah.
Okay, but it may not be a end point. I fear that, because it's like patients using it to ask questions based on their symptoms and getting answers.
Yeah.
But still you have to go to the doctor to decide whether the medicine which you're taking is correct or not. So you might be able to refine your questions and ask better questions.
Yeah.
But for the answers you will have to rely on doctors, unless our law also are rule based. See, today our laws are interpretation based. It is not rule based. And AI is rule based.
Right.
So if our laws are itself rule based, you can do this, you cannot do this, then AI will be able to do a great job. But if you decide whether it is in relation to your business or not, then you will be able to claim credit. It is interpretation based. How will AI be able to answer that? It can give you a starting point.
Understood.
For you to ask smarter questions.
Understood.
But it may not give you a smarter answer.
When we go to doctors, it's very easy for the common public to understand why they need to go to a ortho, or why they need to go to a heart surgeon, or any of that stuff, right? You go to a general practitioner, they will suggest you to go to multiple places. But in the chartered accountant fraternity, people think everything a chartered accountant does is tax or audit, right? Why is it important for the public to understand that matters of GST, matters of income tax, matters of foreign exchange management, matters of fundraising need specific experts who know the nuances of it, right? How do we educate the common public, the businessmen, the entrepreneurs, that every matter in this in these specific areas need specific people who are experts to address it, right? Because everyone thinks chartered accountants is one-stop solution for everything related to accounting or finance. How do we tell the public that there's a heart surgeon who treats on the heart? If you make an orthopedic treat a heart, it'll be a problem. So how does one educate the public?
Very difficult. See, like I've been to a lot of social functions where they'll ask questions on income tax, and I have not done income tax at all. My income tax returns are filed by a friend of mine who takes care of the entire thing. So only answer is that, look, I don't know income tax. And I get some wild looks. What, you're a CA, you don't know income tax? And I said, yeah, I don't know. I know only GST. That perception is definitely changing.
Yeah.
The moment you are beyond a particular threshold in business, you know that your regular CA or your general doctor will not be helpful. You have to go to a heart specialist.
Correct.
Like that, the perception also is changing. Clients also are aware that up to a particular limit, I was able to get the things resolved by my next door chartered accountant, but for these issues I will have to go to a specialist. Also, a lot of chartered accountants or lawyer friends, they also know that they can handle up to a particular point, and then we have a lot of chartered accountant friends coming to us saying, look, this is my client who has this issue, why don't you help? So I don't think we have to do anything actively. Market understands that, and even the fellow chartered accountant understands his limitations, and he will come back to a specialist if he thinks that he is not able to handle the situation.
Yeah. So I come to you for everything GST. I have no qualms in admitting that I don't understand GST, but
and I will come back to you whenever institute allows funding in CA firms. So
thank you so much, Hanish. It was lovely to have this conversation, and I learned so much. It's great to learn in a podcast, because you're doing this. It makes things so useful and productive for everyone. Thank you so much. I definitely want to have another conversation with you, and we'll do it soon.
Definitely. Thank you so much for this. It was thanks to all your interesting questions that it went so smooth. Thank you so much for that.
Thank you.